Welcome, everybody. Steven Sitkowski here, Chief Investment Officer, and welcome to this week's edition of Market Insights. We take a look at what's going on in the market. So let's get to it. I'm going to go ahead and share my screen with you. Hope all of you are doing well. You don't need that, do you? More of that. Definitely do that. All righty. That'll do it. All right. Thanks for joining me again. Want you to know that everything we do here is for educational purposes only, not intended as investment advice. I'm just sharing some of my personal observation and thoughts with you. So when you look at the marketplace, what should you consider? Well, fundamental influences, and we'll talk about some of those. What's putting pressure or adding a tailwind to the market conditions? See what direction the overall market is headed. We'll be looking at various sectors year to date, and then ultimately we drill down for individual stocks. So with that in mind, what's moving the market? Well, the UAW has struck a bargain with the auto manufacturers. So people are back to work. That's good news. This strike lasted about 6 weeks, had an impact on some of the auto manufacturers' stock prices. So hopefully they get back on track. But it's going to be expensive. We got the Fed. They're going to be announcing their intentions on Wednesday. That is November the 1st. There's a high probability that they're going to pause interest rates, at least for November. Then the next meeting will be on December 13th. Gold cracked the $2,000 an ounce barrier. Gold miners have been doing very well. There's an ETF for that. 10-year Treasury sitting at 4.907. Still a bit rich for my blood. We'd like to see that come down, ultimately get under 4.5%. And oil dipped to 83.69. What to watch this week? We have consumer confidence numbers coming out at 10 a.m. Eastern. That is on Tuesday. Wednesday, the ADP employment numbers will be announced. The biggie will be the Fed decision. Also get a JOLTS number. It's a job openings number. That's happening Wednesday as well. Wednesday is going to be a fairly important news day. You're definitely going to want to be paying attention. Thursday, initial jobless claims come out as they do every Thursday morning, and non-farm payrolls and the unemployment rate will be delivered on Friday. So that's what we're looking at. Last week's heat map, whole lot of red. Google got schnockered, didn't it? Down 9.4% on the week. NVIDIA 4%. Energy stocks were down. Financials were down. Some of the medical diagnostics down big. But the only thing that was up, United Health was up, Cigna. Coca-Cola had a good earnings announcement. GE, good earnings announcement. RTX, formerly Raytheon, they've got a war, which is good for them. Verizon way up. Amazon and Microsoft were the winners. Year-to-date heat map looks like this. Big winner, NVIDIA up 182%. Meta 153. Tesla's definitely come back down to earth, but they're still up 65% year to date. Amazon 55, Lilly 55, Apple 30, Microsoft 40. There's been a chance to make a boatload of money this year, especially if you also understand options and leverage. And yeah, market breadth. So for last week, if we look at advancers versus decliners on both the NASDAQ as well as the NYSE, abysmal. We got new highs compared to new lows. On the NASDAQ, 80 new 52-week highs, 1,259 new lows. I don't know if I remember seeing over 1,000 new lows. So still a lot of weakness. Now, today was a great day in the market. We're up about 1.5%, but one day does not make a trend. Consumer confidence came in higher than expected, but you can see it's definitely trending down. All the chatter out there about recession. Inflation remains pretty stubborn. So, the PCE number, personal consumption expenditure, they want that down, they being the Fed, to about 2%. It's at 3.4. Core inflation jumped pretty significantly last month from 0.1% to 0.3%. Inflation expectations, they've moved higher. Magnificent Seven, as we call them, took a plunge. 2-day loss of 5.69%. But I don't think you're going to keep them down. That's, Microsoft, Google, Apple, Netflix, Tesla. Guidance has really been the issue during these earnings announcements. The earnings themselves and the revenue numbers, by and large, have been good, but everybody talks about a lot of unknown moving forward. And the market does not like unknown. S&P, since its high, it's dropped 40 trillion. 40 trillion in market cap. Holy cow. GDP came in hot, 4.9%. Good news for the economy, bad news as it relates to the Fed. Now it's got people thinking, well, maybe the Fed's going to have to hold interest rates higher for longer, like they've talked about. Savings rates are going down. Outlay percentage from the prior period, people spending more money, saving less money. Not a good trend. And the question, is the Fed done? 99.9% chance that on Wednesday they hold. 80% chance they hold in December. 72% chance they hold in January. But, much beyond November and December, very difficult to forecast. Calling for the first Fed rate cut in June. I don't see it. I say fourth quarter is when we get our first rate cut of next year. Earnings this week. So we had McDonald's come out on Monday. There's a ton of earnings, not a lot of really big names. Caterpillar on Tuesday, along with Amgen. We got MetLife, Humana on Wednesday. Just looking to see if any of these are real market makers. Starbucks Thursday, Lilly Thursday. Those are a couple of biggies and nothing really to speak of on Friday. Let's take a look at the charts. See what's going on. We'll start the SPX, which is the S&P 500. It's an index consisting of 500 large cap stocks. You can see that 50-day moving average is sloping down. We approached it. It rebuked us. And then we've had one good day, but we need a bunch of good days. We need for the S&P to get back up above the 50-day for us to have any kind of momentum. How about the Qs? This is big tech, much closer to that 50-day moving average and not such a severe slope to the downside. So this is when the market is supposed to start moving in the right direction. We have seasonality in our favor. November, December, January, typically very good months on the market. So we'll be keeping an eye on that and get back with you next week. Stay blessed. Bye for now.